Welcome to DrJLT Economics. I'm Dr. Julian Tong. In today's episode, I want to talk about a perfect bubble, the bubble of Bitcoin. Some of you may wonder, why are you saying that Bitcoin is a bubble? Because a lot of financial media has been quite hard on this new asset, and I put it in quotes. I will in this episode cover three distinct features that make Bitcoin not only a bubble, but a perfect bubble. And some of these exact same points or features are also used by the proponents of Bitcoin as reasons why it is a transformative asset. Now, I will present my arguments, and then I think I will make a strong case that Bitcoin is not only a bubble, but a perfect one. And it shares not only some similarities with historic bubbles, but it is one step above them. The first feature of Bitcoin that I'm talking about is that Bitcoin itself has no intrinsic value. This is something that is frequently, actually very, very rarely talked about. It's frequently ignored. Unlike a lot of other bubbles that have ever been recorded in human history, the Bitcoin is something that is basically a string of numbers that are stored on the computer network. It does not by itself has any value. Of course, currently it has a price, so it can be argued that it can be exchanged for currency which can purchase value, but in itself it has no intrinsic value. Historically, we have seen a range of bubbles. Perhaps one of the earliest that has been talked a lot about in history books is the tulip mania, which was a kind of commodity. So even commodities can have bubbles, but at this point, today, it is very rare for commodities to go really into big bubbles, and the reason is very simple, because these days we have a very clear, very quite easy way of getting information, and we have a lot of statistics about the usage of each commodity, the production of each commodity. So it is very unlikely that someone can make a case that a certain commodity is worth so much more than it was a day ago. Or something dramatically has changed. Of course, this does not mean that prices don't fluctuate, because economic conditions fluctuate, and this does not mean that commodity prices always reflect their own value, because their financial market is imperfect, just as information on the usage and production of commodities is imperfect. So price is not a perfect reflection of value, but I think today it is very difficult to inflate commodity prices to the level of a bubble. And then we have, of course, stock market bubbles. Stock market bubbles really happened quite frequently until perhaps always. Ever since there was stock markets, there has been bubbles, and in the beginning it was more speculative and people are more primitive, And these were the times when not long after people were speculating on tulips. But these days, stock market bubbles are justified by future profits. The biggest the most bubblous, frothy stock on the market today is perhaps Tesla, which at some point had a market capitalization higher than GM, Ford, Toyota, Mercedes, BMW, Volkswagen, and Ferrari, and a couple more combined. So this is how ridiculous it is. A company that manufactures some cars, but not that many, and that its cars are somewhat better in some areas, suddenly has a market capitalization 10 times higher than that of GM or Toyota, which probably sells maybe 1,000 times as many cars and has dealerships all over the world. That is how insane it is. And this is justified by future profits. And, well, that's a bubble. And thirdly, we have also real estate bubbles. Real estate bubbles are basically usually justified by supply and demand, right? Currently, okay, there's supply. Supply is low because this location is so limited. It's so difficult to build. It's very difficult to replicate something like this in this area again. So blah 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 blah, and the price must go up. And I'm not going to sell if the price doesn't go up. And of course, real estate bubbles are also facilitated by cheap loans, by low interest rates, and by other stimulus, basically measures by the government, such as ways to deduct taxes, etc. Now, these things, whether it's commodity, stock, or real estate, or other types of bubbles that is not Bitcoin, has the same share this one same feature, which is that they have some intrinsic value. The intrinsic value of commodities are those of usage. The intrinsic value of stocks are basically the dividends that can be paid, not profits, right? If a company is managed by people who are just, very smart, let's call them smart or wise men, they're so wise that they don't pay dividends, and then this stock has no value. But people can't buy it. No value investor would invest in it, but a lot of speculators could speculate on it. Well, all right. And then there's the real value of real estate basically can be argued as either the value that you derive from living in the house, or the value that you have collecting rent, which probably in the reasonable range is about 20 to 40 times the annual rent that can be collected. That's the value. Now, Bitcoin, because you cannot do anything with Bitcoin, you cannot eat it, you cannot live in it, it does not generate any dividends. It has no intrinsic value. But because of this is actually not a flaw in terms of bubbles. It is actually a feature. It is a feature because for security, commodities, stocks, or real estate or other bubbles, there's a revaluation process. When the market senses that the asset has been overvalued, there's always, in fact, a revaluation. And this revaluation process is otherwise known as a correction, otherwise known as a collapse of the market, and otherwise known as the burst of the bubble. But the Bitcoin is a perfect bubble in the sense that it cannot be revalued because it has no intrinsic value. So all that there is a price. It has a price but no value, and so the price can be $1. And it's reasonable, kind of, because you can sell it to someone else, and it can be $1 million, and it's still reasonable because it doesn't have any value. It's just simply, if someone wants to buy it, if there is a price, then there is a price. It doesn't have to have value, so it cannot be reevaluated. That's the number one feature. The second feature of Bitcoin is that it has no history, right? Compared to some other assets, such as particularly precious metals, which have long history, silver and gold, and also I think more recently some other noble metals, especially platinum. They have prices, they have use cases, and they have industrial use cases, and they are very rare, and they are very durable. So these features mean that they have historically been a store of value. Bitcoin does not have history, and nor does it compare to fiat currencies or other currencies that has been backed by assets such as gold. So you can, because it has no history, it is very easy to tell a story. And if you know anything about investors these days, and if you know anything about today's culture in general, is that people buy a story much more than they buy a good stat sheet or a good record, right? They want to buy into a story, and the story of Bitcoin has changed over time. In the beginning, it was a means of exchange that will replace currency because it is so free. It cannot be tracked. It cannot be, confiscated, etc., etc. But now, because we see that the transaction fees are very high, transactions are very slow, then now the story changed to that it is digital gold, that it is a store of value. The reason that these stories can be told is that there is no history that disproves these claims. And when there is no history that disproves these claims, people can just make up stories as they go. And I'm pretty sure that if currently this store of value story falls apart, there will be a new story that will be told, because this is a feature. This again, it's a strength, not a weakness, having no history. Now the third feature of Bitcoin being a perfect bubble is that it has weak regulation. Now weak regulation, I think, it's not necessarily a bad thing in itself. I think a lot of times too much regulation is bad, not just for the financial market, but in fact for businesses and for individual liberty. A lot of things, when we have too much government interference, we end up with suboptimal solutions, because government interference distorts signals in the market, and distorts incentives, and these basically disrupt human intercourse. Now, however, when I talk about Bitcoin's bubble, when it comes to a bubble, this actually is a benefit. And it basically, for example, because it is not considered a security, and I would say that it is not, absolutely not a security, but because it isn't a security, a lot of investors can basically just talk Bitcoin up, because if it were a security, they would not be able to say that, hey, I have bought this and it is so good, why don't you buy it? They can't make these claims on television, but when it is Bitcoin, because it is not a security. I have just bought something, let's call it a good. I have bought a TV and it's so good, why don't you buy it? I'm just recommending it. And that goes. And also because there's some weak regulation in terms of how information has been spread in advertising, then there are a lot of, especially when it comes to something that is not security, but just funny enough, it is also a financial asset. So it is one of the things that you can buy and trade, but it's not a security. It's very easy to trade, but it's not a security. And so these basically create an environment where it is very easy to pump it. You can go on media, whether it's mainstream media or basically just some blogs. You can talk Bitcoin up. You can talk your books, and it's all perfectly legal because it's not a security. It's a good. It's a limited supply good, but it's a good. So you can talk about it. And so this weak regulation with regards to Bitcoin, which of course I'm not saying that the Bitcoin should be regulated, but I'm just saying that this creates the condition for it to bubble up to basically a new level compared to other types of financial assets. Real estate perhaps is actually similar. You can talk up real estate, but real estate has value and it has history. So these are the differences. So with these 3 points covered, I would argue strongly that Bitcoin is not only a bubble, but it has the perfect condition to make the perfect bubble. It is different from other bubbles that has ever occurred in human history. And it is for this reason that its price just simply can be anywhere. It is reasonable if someone wants to buy it, that the price tomorrow goes to 1 million, but it still does not have any value. And the moment nobody buys it, the value just dissipates. And some people would make the comparison. I see a lot of people comparing Bitcoin to digital gold, making the argument that, the same is for gold. But it is not, because for 2 things. Number one, gold is used in the industry. Gold is used in some chips, semiconductors. It is also used in some satellites, and it is also used. It has some industrial uses, not as much as some other metals such as platinum, which is also a precious metal and similarly priced. It's also very expensive metal. It's also very rare, and it also falls into the noble metals category on the element table, periodic table. So I'm not saying that gold is so vastly superior than everything else, but gold has some value, intrinsic value, and also gold can be used as jewelry, and it has history and etc. And so it is different in that case. And also gold itself is very durable. It is among the noble metals, right? It's one of the 7 noble metals in the that we have found in the world. Gold is in fact the only noble metal that has a color, that has a shine that people love. And so and noble metal is so unique in the sense that it does not decay, it does not erode. And so gold, you can just store there. It can be 10,000 years and it still will be there. But Bitcoin, number one, Bitcoin requires electricity. It needs to be mined. It needs to be mined constantly. The moment it's, if let's say just something horrible happens, the world just loses electricity for a day, then Bitcoin is not being mined. The Bitcoin is gone, and so that is how it is not durable. And secondly, Bitcoin. A lot of people want to talk about. Okay, I think I will make another video a bit later to talk about some of the features and weaknesses of Bitcoin and why it is not what it is made up to be. Right? I think I have some decent understanding of that, but this video is more about Bitcoin being the perfect bubble, and in my judgment, it is a perfect bubble. Now, the last question I want to address is why is it that the Wall Street guys are very happy with Bitcoin? Right, a lot of Bitcoin proponents want to say that it is against the establishment. If you there's inflation coming because of quantitative easing, because of money printing, irresponsible fiscal policies, etc., etc., etc. And we don't love the government. We want to rebel. We want to protest. And that's why we buy Bitcoin. But why is it that Wall Street is very happy with Bitcoin? Why is it the financial media in the mainstream, CNBC, etc., want to talk about Bitcoin all the time? Well, the reason is very simple. Because Bitcoin poses no danger to the financial system. Bitcoin itself, being the perfect bubble, is completely, I would say, insulated from the systemic risk of the financial system. So if Bitcoin goes up, it's not going to challenge anything in the establishment. If Bitcoin comes down, it's not going to distract any value from other assets. So it is simply an extra thing that they can speculate on, and it is even better because it has these features, so that it can be pumped, that it can be dumped with basically very old tricks that can be that were found 100 years ago, before there were much regulation on the stock market on Wall Street. The old tricks, 100-year-old tricks that been outlawed, but because Bitcoin is not a security, the same tricks now can be applied, and because it has no history, no value, hey, it can be just pumped and dumped and pumped and dumped again and again, and so the money, the profits, the real profits are kept by whoever that is controlling Bitcoin, but and make a lot of money from it. But in the meantime, it is simply a bubble, and I'm pretty certain that at some point, perhaps with the upcoming collapse of the U.S. dollar, perhaps people will. The financial industry will stop pumping Bitcoin, and its price will go to its value, which is none, and that perhaps is perhaps the end of it. Now, I'm not saying Bitcoin itself, the technology, has no merit at all. I'm just saying that being the prototype of blockchain-based currency or digital currency, it is simply a prototype, right? A digital currency can be backed by something else, something with value, and something like a commodity, for example. And then you can trade commodities with these digital currencies. You can even create currencies, legal tenders backed by a commodity or gold, or even fiat, let's say, based on these technologies. This can all be done, and I think they are being done. In fact, I had a company, IDFX, that was trying to do this with commodities, but I was not a good enough entrepreneur to make this happen. But nevertheless, these things can be done, and they are valid. The technology, the direction I agree that it is something that is great. But to pump Bitcoin because it's a prototype, it is the first to occur, to appear, is foolish or malicious, depending on depending on where you stand, right? So Bitcoin is a perfect bubble. I'm not discouraging anyone from speculating in it. I personally would not, but I think you probably shouldn't. But I don't want to be the guy that says that Bitcoin is going to zero tomorrow. I'm just saying that there will be a time, and that time I think is within the next 5 to 10 years, when US dollar collapses and nobody is pumping something that is equally volatile and speculative. When that happens, Bitcoin is likely to disappear. And some new digital currencies backed by commodities, perhaps even backed by real estate or stocks, especially the non-fungible tokens, they can be backed by real estate and be, let's say, a deed for the house, but of course not the current completely speculative application of non-fungible tokens, right? I will talk about that in a future video. So this is this is what I want to argue about. So thank you very much for listening to me in this episode. I hope it has been helpful. And if you like this recording, please subscribe, and you can also follow me on Twitter at DrJLT, and you can also find my websites DrJLT.com and my business newfiliac.com. That is NEOFILIAC.com.